All right, let's dive right in. Amer Sports just dropped its third quarter earnings, and wow, the market's reaction was something else. We're going to break down all the numbers, get into the strategy that's driving this, and figure out what it all means for the stock going forward.
And this is the immediate verdict right here. The stock surged 8.5% on some massive trading volume. I mean, that is a huge vote of confidence from investors. So you have to ask, what exactly was in that report that got everybody so fired up?
Well, the short answer is this. Amer Sports delivered a classic beat and raise quarter. And if you follow the market, you know that's Wall Street's absolute favorite kind of surprise. It means they didn't just smash expectations for the last 3 months, they also jacked up their forecast for the rest of the year. That signals some serious confidence.
Just look at the size of this earnings beat. Okay, the 2% revenue beat, that's solid for sure. But the adjusted earnings per share, that's where they just blew the doors off. They came in at 33 cents a share. The consensus was around 25 cents. That's a 32% beat. A number like that is what gets Wall Street buzzing.
You know, that top-line number is even more impressive when you start to peel it back. They didn't just beat what the analysts were expecting. Their 30% year-over-year growth actually flew past the company's own upgraded guidance. Think about that. They set a really high bar for themselves, and then they just pole vaulted right over it.
So, how did they pull this off? What were the real engines behind this incredible performance? Let's get into the details and see exactly what's fueling all this momentum.
The amazing thing is that the growth was so broad-based. It wasn't just one thing. Their two biggest segments, outdoor performance, which is home to Salomon, and technical apparel, led by the superstar brand Arc'teryx, were the clear powerhouses. Together, these two drove about 80% of all revenue, posting incredible growth of 36 and 31%. Just phenomenal.
Now, if we go one level deeper, a couple of strategic pillars are really driving this. First, their direct-to-consumer business. That high-margin channel just exploded, up 51%. And second, their expansion in Asia. I mean, look at these numbers. Greater China up 47%. The rest of the Asia-Pacific region up 54%. And all of this was fueled by what management literally called exceptional growth in Salomon footwear and a huge re-acceleration at Arc'teryx.
You know, management kept mentioning a term you might have heard, omni-comp, especially for Arc'teryx. So just a quick refresher, omni-comp is a really key metric. It looks at sales growth across all channels. We're talking physical stores and online for locations that have been open for at least a year. For Arc'teryx, that number accelerated to a massive 27%. To put that in perspective, it was just 15% last quarter. That's a huge jump and a major signal of incredible brand heat.
Okay, so a fantastic quarter is one thing, but what really sent the stock flying was management's clear vision for what's coming next. Let's take a look at their updated guidance.
The CEO, Zheng, he really laid it out clearly. His message was, we're not just riding a wave here, we are actively taking market share. This quote gets right to the heart of their strategy, using these premium powerhouse brands to really dominate the high-end outdoor space. And here it is. This is the raise part of that beat and raise story. They boosted their full-year outlook pretty significantly. Revenue growth guidance got bumped up to the 23 to 24% range, and, even more important for the bottom line, the adjusted EPS forecast was lifted to between 88 and 92 cents. That is a massive signal of confidence heading into the holiday season.
And they didn't even stop there. They also gave us an early peek into fiscal 26. They're already saying they expect revenue growth toward the high end of their long-term target, which is that mid-teens range. Essentially, they're telling the market, hey, this incredible performance, it isn't a one-time thing. This is the new baseline we're building from.
All right, we've seen the stellar numbers, we've heard the bullish guidance, so now it's time for our take. This is the next call where we put it all together and give you our outlook.
So this is the million-dollar question for every investor right now, isn't it? The good news is out. The stock has already had a huge pop. So is there more gas left in the tank, or was that the big move?
For me, the bull case here is pretty clear, and it rests on three very powerful pillars. First, the momentum we're seeing in direct-to-consumer and in China, that feels structural, not just a temporary boost. There's a long runway there. Second, Salomon is really hitting an inflection point. It's becoming this powerful second growth engine right alongside Arc'teryx. And third, all of this is driving a really favorable mix shift that should lead to higher, more sustainable profit margins down the line.
So, putting it all together, our call here is decisive. Based on this fundamental acceleration we're seeing, the super confident guidance, and the clear strategic execution, we are assigning an outperform rating to Amer Sports. We see a clear path for the stock to not only retest its prior highs, but to push right into the mid-40s. The rationale is simple. The company is firing on all cylinders, there looks to be some conservatism baked into their new guidance, meaning more upside, and as the market gets comfortable with this new, higher rate of growth, the stock could earn a higher valuation multiple. It's what we call a potential re-rating story.
So, there you have it. Amer Sports delivered a truly impressive quarter, and they backed it up with a very compelling growth story. But you know the drill. Always make sure to do your own research. This is not financial advice.